Start. Morning, traders. Welcome to the Traders Lab. I'm your host, Tom B. Can I please get a screen and audio check in YouTube and the Bookmap Discord Trader Lab? Thank you, Marty. How we doing in YouTube? And again, welcome to the Traders Lab. All right, we got a lot to discuss today, and thank you, Tony. And grab your pen and piece of paper. I'm going to try to run through this as quickly as possible. If you're in Trader Lab, you already know the trades that were posted and we've discussed along the way. So the important thing right now, everybody, is this is about the business of trading. This is how to integrate Bookmap order flow tools with auction market theory using the volume profile as a chassis in the intraday developing time frame. It's based on structured trades that you can learn. And these are available to everyone in the Bookmap Discord Trader Lab community. There's no cost for it. There's a link in the bottom of YouTube if you're interested in the Trader Lab and learning about the business of trading. Now, the thing about the business of trading is it's really different than anything you probably imagine it is. And what's different about it is you're going to try to fit it into what you are familiar with. And that is the way we operate here on planet Earth. The reality of trading is it's like being in a foreign environment. You might as well be on the moon or Mars, because the rules, if you will, that will apply here in the real world, if you want to call it that, or our familiar world, do not apply in the trading world. And we need to be able to develop an understanding of the triggering mechanisms to try to draw us back to earthly behavior. Whereas in the trading environment, we actually have to manage those habits and behaviors and chemical stimulus that happens from our primal wiring, because all of that is outside the scope of what actually works in the trading business. And you're going to come face to face with the biggest obstacle in the business. It's you. I believe anyone who comes to Trader Lab can learn how to trade. It's certainly many traders have had that experience and they've moved on to career paths. Other traders are not going to be able to do that because either they don't do the work, they have too much impulse, they are more inclined to a video game, and they don't have the personal discipline to lay out a track for themselves of self-education and self-management. This is a business of discipline and also managing the inner self, which is actually pushing back against uncertainty. Where every moment in the market is completely uncertain. The market's 100% random 100% of the time. We are going to try as best we can to create certainty to overcome our fear. We're going to try to do things that are outside the scope of what this actual business model is. So while you're pursuing certainty and squeezing risk out, those decisions are not made by what's in the best interest of your continuity and success and sustainability in the business. Those drives are created by subliminal and more instinctual primal behaviors of avoiding risk and creating certainty. If you can't have certainty in an uncertain environment, you have to solve for uncertainty. That's the point of the Trader Lab. Hope it makes some sense. Welcome again to visiting Trader Lab. I will now be moving quickly. Grab a pen and paper because I'm going to move quickly. And also what you need to do is review these streams because it's a lot to swallow. It's like drinking from a fire hose. The best way you can do this is review them and come to Trader Lab. General disclosure, all Bookmap Limited materials, information, and presentations are for educational purposes only and should not be considered specific investment advice or recommendations. Risk disclosure, trading futures, equities, and digital currencies involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results. Please remember, this is not a trade calling room. This is for educational purposes only. Now, I have to remind you that right now there's an opportunity to win the coveted blue jacket. The blue jacket contest is going on for the month of February. All you got to do is show your trades that were entered and managed in Bookmap and using the trade control. In other words, you can execute on Bookmap. You can use the dome. There's a lot of different ways to do it. You can do the one click right on the chart, which is what I do. and it could be replays, screenshots, actual trades, doesn't matter. Do it. Submit it. You'll get publicity. You'll be in the newsletter. You'll be a Bookmap hero. You'll get a special designation in the Discord so everybody knows that you have been selected for your excellent work. Annotate. Now, if you're in Trader Lab, you're already doing this. And if you're not doing it, why not? How do you learn? You create sample after sample after sample, because what you want to do is create unconscious competence. You need to know what will happen. You don't know where, but you need to anticipate it so that you already know when you see it, it's unconscious, so you can act in a timely fashion. That only comes from practice. That's what I did. I have binders of screenshots. More trees have fallen. Now, here's the hierarchy. This is the process you're going to see here. Auction market theory is the mechanics of the market. How does it work? Auction market theory is shopping. What the market is always doing is trying to figure out what's too high, what's too low, and what's fair. The thing about this process is you already know the process. It's shopping. It's the supermarket. If it's on sale, in your perception of value, and it's below value, you throw 5 in the cart. If it gets too high, you might throw 1 in the cart because you need it for the casserole tonight, assuming it's tuna, but there's not going to be a line out the door to pay a high price for the tuna. And then there's a retail price where most of the volume goes through. This is what creates rotations. Now, this is relevant in the sense of time frame. We are trading multiple time frames, so we can go down where you can thread it with a needle, microstructure, and the same process or rotation takes place. Now, the thing to understand about time frames, the market can be sliced into anything you want, okay? But time is not really material in the sense of market mechanics. Time is relevant to how you slice the market up to try to identify rotations. Time frame is rotation specific. Some traders trade higher time frame, swing traders, position traders. Other traders are trading inside higher time frames, and that's what we do as day traders. And then we're going to trade the rotations. So let's say, theoretically, and this is just theoretical, of course, the trend is down, but you're a counter trend trader. Then you would take a long in a downtrend. Other traders are just short. You could be taking longs. How do you reconcile this? Is that conflicted? Well, if you have an edge, you can trade anything you want at any time. But where is the dominant side? Today, the dominant side are sellers so far. So that creates something called context. Context is the condition in the time frame you trade. And in the business of trading, the way I look at it, and at least mentally, I tried to connect trading to things I understood. Because if you just take trading in a vacuum, it's like you might as well be on a different planet. In many ways you are. But what can we relate to? Shopping, because we can relate to that. We understand shopping. We understand time frames, right? Because that's rotational in different time frames. I think we understand that. We understand shopping, and we understand that inside of different time frames, we can be short while other traders are long, or we could just be taking shorts on after counter rotations. That's all plan specific and your time frame specific. So we have to define that. We also have Bookmap, and Bookmap lets us see inside of different time frames. Now, for me, Bookmap, I call it the tip of the spear, because that's where I can open it up and see the individual participant behavior, and I can drill into it into a microstructure and then see triggers that I have vetted. But the triggers happen all over the place. What do I do with that? How about this? I go up in time frame, my rotations that I'm trading, and then at locations in higher time frames based on the volume distribution in these profiles, I then use this in alignment for triggers. And then, as they say, let the chips financially fall where they may. Now I'm going to take it a higher time frame, and pay attention, please. I'm going to move quickly, and if it doesn't make sense, I understand, and I apologize in advance. You can ask your questions. I can't see them at the moment. This is very important. Now, if you guys remember, yesterday's shorts started up here, and it was short only. This was the ETH high. And then yesterday, Once we got below 45, it was the Acapulco cliff dive. Take the stops out there. And our target yesterday was 7. If you remember the stream, you should watch yesterday's stream. Was 70 and 61. For me, 70 was fine, but 61 was the next location. Now, what do we have? Now, we got short covering in here yesterday. Now, at the end of the day yesterday, I looked at this. I said, oh, I think we're going to, do this kind of thing. Rotate. We already got the longs out. What does the market do? Market goes up to go down, goes down to go up. So initially it was this for today and maybe, up in here. Instead, we're down here and it's like, what? What's going on? So that changed everything because we are opening down around yesterday's low. Actually, I think we opened in a gap. That says, let's look at language. It says, this is the retail price from yesterday, highest volume. There's longs in here. Now, the thing we don't know was this, if this is short covering, we might have new longs. Well, what happens if all these buyers in here, some are short covering, getting squeezed, and new longs? What happens if we open under here? Don't they do the exit stage left, and then might we get additional selling? Now, is everybody with me? And this opens up the following targets. By the way, what is this? Language. This is the retail price last time we were here. This was the Greenland, we didn't mean it. This was the target on the Greenland fiasco, I like to think of it. We're going to take Greenland and it's tough. We didn't really mean it. So, and this was over Martin Luther King. So remember, market was long, sell stops under here, gap under the bus, Greenland, no, we didn't mean it, support, reversal, squeeze the shorts out. Notice what happens, longs, take the longs out. Longs out, looking for the reversal, too high, down here, looking for the reversal. What? Next target, here, here, under here. Here is next. 90, who knows? This is also a target. So that's all I can tell you. 68,802, target. This is all in TraderLab. And then 6790 and wherever, not my problem. What is it? My opportunity. Now, let me show you something else. So you got the levels. Now, I got to keep rolling, okay? This is the volume profile. What it is, and let's look at the language. This is a retail price. If it's too high, this is a store. This is shopping. I'm not paying that. ETH high. All right. This is retail in a higher time frame coming from back here. Multiple time frames. I can't go into it, but just believe me. This is shopping. If that's too high and I get under here, what do? Sell stops are here. We're taking these longs out. Then we get shorts, okay? Going to zero. What happens here? Target was 70 yesterday. Watch yesterday's stream. And this was our outside, 61. 70 was fine. And why is this? If that's too high, this is too low. This is the fair price. If this is now unfair and I can get below this, then what do? I have 29, high volume, and then I have 02 and 90, so low volume. I'm not paying that, tuna. Fair, on sale. So how can I trade this? I can be short to there, higher time frame. And if I get under here, there's sell stops here, the parade can continue. Not my job. Is everybody with me so far? Very important. This is before the market opens. Now there's more. Now we got to go to the ETH. ETH is the last auction prior to the RTH open. Let's look at the ETH. What do we know? 69.23 was the retail price from yesterday. We know 44 was too high. Let me just get a little further here. 66. Where did we go? What was that magic price? 67. Remember? Too high. So that's too high. I come up and the retail price from yesterday's 23, which is here. I test it. Now, no clue. I'm the clueless, but I'm not ignorant. And then what? If this is too high and I check it and there's no precision, this is what I like to say, horseshoes and hand grenades. And now I rotate. Oh, I'm not paying that tuna. Oh, yeah, but it's on sale. And now my retail price in the ETH in this distribution is this. That's where the high volume is. Too high, too low retail. Well, the same concept. If this is too high from yesterday's RTH, and you'll notice how the volume is thinning out up here. It's saying is there's less buyers. The buyers and the sellers, the meat of the bone, the high volume is here. Now I'm in the ETH, less buyers. I'm not paying for that. Get out of here. That's too high. Now right here, I leave it. This is like leaving the store. I'm out of here and I leave. What does that tell me? The language of the market. Too high, too high. See you later. Hasta la vista. Write this down. 81, 80-ish. Low volume node. Are you guys with me? How you doing in YouTube? I'll be up for oxygen in a moment. This is before the market opens. Now there's another piece. What is it? If the settlement price is up here, and this is where we closed, and I have longs in here, and now in the ETH, I'm taking these guys out. Isn't that interesting and important? So what do I know? I broke away around 80-ish, and yesterday's value area, I'll have to show you that in Bookmap, is if I'm out of value and I'm opening maybe in a gap out of range, then I can fill the gap. I can come up to 80. I can do anything. And depending on what happens at 80, I can do continuation selling. Am I going to get long? Not so much. But that's just me. Doesn't mean it's the right thing to do. What is the right thing to do? Here's the answer. The right thing to do is to follow your plan. Is everybody tracking so far? Let me see if I can get these chats back. Sorry, guys, I don't have my streaming computer anymore. It went, as you know, to the happy hunting ground. My streaming computer setup, and I have to replace it. I haven't had a chance yet. Okay, this is the RTH open. This is yesterday's low, so we're opening in the gap. The ETH inventory is short, so if the ETH inventory is short, then we can anticipate a rebalance. So in my plan for today, I have it written down. I am opening out of range in a gap. What is possible? Let's talk. Now let's go back to our context grid sheets, Trader Lab. You got to look at where the market's opening. You got to take the higher time frame, look at what is happening and what did not happen. Look at what happened in the ETH. So in my plan, it says ETH inventory doesn't need to rebalance. When you open at a range and the ETH is short, what might happen to those shorts? They get squeezed, short covering. Now, the question always becomes, is it going to be initiative buyers because now it's a deal? Or is it only shorts that are going to get squeezed and it's going to set up continuation selling for us? And where might that be? At that 80 area. Let's look. Now, 1 second. There's the low volume area at 80. Notice this is the high of the day. Who knew? And who knew? Why is it on my chart because I just showed you at the top of the stream. Do I know what's going there? No clue. So let's not think about it. What I know is market mechanics, and you can learn this. I know how the market works, why it does what it does, and how at times to get in alignment. So I know I have a potential for gap fill. By the way, let's look at, again, the market's out of balance. Is the market responsive? Responsive means responsive buyers. In other words, profit taking. If the ETH is short, and let's just say you're going home short from yesterday, I don't know, then what? We can get short covering. That's what you might get. What you get, you know. So what do? If it's responsive, we can fade the gap back into balance, and we have to watch for a bounce and a retest of the previous day's range and value area. And then does the previous range hold? Is the prior range holding? If not, then you go short. If we come inside and it holds, then the selling would be over. But I already know about 80, and I know that I gapped and I rejected yesterday's fair price. This is what I know. Oh, and I have to give you the targets. Sorry, I did give you the targets. So you already know the targets in the higher time frame. This is how you integrate multiple time frames. Now let's go into Bookmap. Let's look at actual Trader Lab structured trades. Now, when I say this, I'm going to be including advanced processes, but when you're in Trader Lab, the goal of Trader Lab is to start you out with one trade. And immediately you're going to be thinking about your P&L. Right now, most of you are probably thinking, I want more. That's what amateurs do. Sorry. But serious traders understand there's a learning process and a steep learning curve. And if you can get one trade under your belt, then you can work on your discipline and market mechanics, because you need all the pieces to be able to have one that has edge. Okay? So, what do we know? RTH open. What do we know? 68.52 is a naked volume point of control. By the way, there were shorts in the ETH I narrated in the Trader Lab. It's not so important, except if you go back to the Trader Lab, you'll see there were a number of shorts that I posted. Now, very important to understand, I don't call trades. You don't need to take my stops. Everybody takes stops. Not a big deal. It's just inconvenient, among other things. So I open. I get VPOC migration. I am under yesterday's low. I'm going to show you a short. So I'm in a gap, okay? Now, the statistical probabilities, I'm opening lower outside of range. Let's go to our statistical probabilities. Here they are. Write these down, but you have to vet them for yourself. There's a 98% probability that I take out either the first hour's high or low. It's called the IB. I don't know about you. I'm leaning south. What do you think? There's a 91% probability we take out either the ETH high or low. Considering the ETH high rejected yesterday's fair price, which side are you leaning on? Might you go for this? Considering this was a naked volume point of control, 68.51, which was a target coming down, and it's a retail price, let's remember the language. If it's too low, it's on sale. I can do this. If it's too high and I break below it, it's now resistance, right? And then what do I have? The ETH low, over 98% probability-ish, 90%. I have the 72% probability to get there on its own. I think I'll go for that one. Now, the previous low, 68% probability to fill the gap. Don't forget that. Taking out, I think I said the first hour high or low, about a 98% probability. Getting to the previous value area low, 45%. That's up the financial food chain. We'll look at that one. Then, after that, there's really nothing on the list. Oh, also taking out either the previous high or low, and you got to know that's not on the hit parade to take out the high. Probably. I'm never going to say never because I've seen things in trading that, seem like it could never happen, and it does anyway. Hold on. 68% probability to take out either the high or low. Once again, filling the gap. So I have a high probability of coming here. This is my retail price from a previous last time I was here. If it's too low, I can bang on it, and then there's fuel or stop sitting under here. Let's now watch. So first trade, and these are aggressive. I always say developing traders don't trade here because this requires, remember I talked about unconscious competence. You already have to know what might happen and where. Let's go. I got resting liquidity sitting here. I got more resting liquidity here. So I know there's buyers here. This is how order flow can help me. And let's continue. And over here, I had sellers. Okay, so let's just be aware. There's the liquidity. There's the buyers. So here, I had my sellers. So we're not going to forget that, are we? This is called VPOC migration. Extremely aggressive trade. Not recommended to anybody unless you already understand. It's a narrative. The key is this. Okay, remember shopping. If this was too low previously, remember in the store, and now it becomes too high and I have liquidity, I can sell it. It's a structured trade. So right here, I have a sweep. I'm in the RTH open. I have my overnight low open statistically, which would give me the impetus, you like that word, for a short, right? So this is an aggressive short. VPOC migration. Now let's look at the breadcrumbs. I got sellers here. I got buyers there. Retail price, teeth chatter. New retail price. This is the same as that. This is leftover. It was a retail price from the last time we were down here. It's called naked volume point of control. This is developing volume point of control. They both represent the same thing. This is going to move around, and it is dynamic. Also at the RTH open, this starts at 0. So as volume comes in, this is very sensitive, and that's why you have to know what's going on. You have to have a full view of the condition of the market, not just what's happening here. So I know I have the overnight low as my first target because of high probability, over 90%, you see? So right here, I have my buyers, I have my sellers. I got my buyers, so this is resistance, this is support. Inside of this is my retail price, right? And my liquidity comes in. When I break here, I can sell this. My stop has to go over here, and I'm going to this. And ETHO. So for that, or for this, your call. Trade management, back to the mid in the VWAP. I do not micromanage. I don't, and I'm not saying what you should do. You need to know what you will do. Trade plan, so you guys understand, is not made up here. What I have found, and I've worked with a lot of traders over the years, and you guys know about me, I'm doing this 47 years, and I train traders. First, I had to train myself and go through the misery of not knowing what I was doing and being caught in trader Groundhog Day, random winners that I thought I just had to make better. I didn't understand my process was defective, and anybody can have winning trades. The problem wasn't the winning trades. The problem was no edge. Gamblers have winning hands. They don't have an edge. They lose money. Think about it. So it isn't winning trades. It is not your P&L. It's the process that gets you a positive yield, a positive P&L, not random winners with a losing process. Does that make sense? So I had to figure that out, and I tried for years to apply many different processes to try to get to that. And I would have winning weeks, winning months. You see, there's part of the fallacy. But I was always trying to fix it. And what I didn't understand early on was I had a defective process, and it couldn't be fixed. So I had to really realize that what I was doing, in spite of my effort, hard work is not the answer in this business if your process is defective. That's all I can say. Because you're going to keep coming back to the same place. And if that's you, it's not your effort. So this is too high. There's my liquidity. This is an aggressive short break going for here. All right. So 90% probability to go there and say la guerre, right? Watch. VPOC migration. This is a structured continuation trade in the Trader Lab. If you didn't get short here, this would be, this is a short. Why? We're under the ETH low. We're under this. This is called the variable high volume node. Let me take it a little further. Follow the flow. Speaking of trading, trading is like a flow state. And that has to come from experience. And it's almost like driving a car, Indy 500. You know, and when you're driving, if you're racing or even in a professional game, you know, on the court, you're in a flow state. It's all unconscious. You're not going, what should I do? Who do I pass the ball to? How do I take a curve? Your mind is already doing it. You're anticipating what comes next. You're in the moment and you're multitasking. Too high. I'm not paying that. What about this? Too high. You got to be kidding. Variable high volume node. I got to label it. What's it in alignment with? See the structure? And again, always remember, the outcome of every trade is random. It's only maybe. So this need to be right, which is our primal wiring, you can't get it here. What is right? I always get this. Well, I was wrong. I was right. I'm going to say, well, did you follow your plan? Well, then you were right. The trade failed. Were you right or wrong? No, you were right. The edge didn't show up on that one individual iteration. Congratulations. You have a plan. And if it has an edge, the dollars will come across the table to you just like it does in the casinos. It's just a random distribution of outcomes. Follow your plan. If you don't have a plan, now all you have is emotions. And if you have emotions, you're under control of the lunatic under the hood. So this is a short, and this is a short. So you have two entries here. This is an order flow trigger. There. You can sell it there. You can sell it here. Either one. Where you're trying to go. Down here. Let's watch. VPOC migration. VWAP. Now what you have here is, here, let me take you back. This now is, I'm going to microstructure. The buyers were there. The volume is there. Let me show you how this might work. Couple pieces here. Now this is a little more advanced and will disturb you a little bit. Chop, chop, chop. Break high to the mid. Who knows? The sellers are here. So the buy delta is here. And I don't know here what's happening. I know there. And I know this is support. Okay? So if I'm taking a short here, I also know it's resistance. So this is support. Notice the buyers are here. That's absorption. So right here, it can, do whatever. Or if I get below here, I can either manage my trade with this or add or do whatever I want to do. Doesn't matter. I get VPOC migration. This is important. There's two possibilities. And this is where I'm trying to go. All right. Now, if I cross here, this is my resistance right here. Right there. So right here, when I cross, that's resistance. So here's the possibilities. When I cross this, I'm out. Or this, because my sellers are there. My sellers are here. The key piece in this is the cross. When I cross, then at the moment, this is too low. It's a variable high volume node. I made up the concept years ago because of what I observed. I observe these VPOC migrations as a real-time shopping experience. This here is the same thing. It's too high. Well, when I cross from the other side, it's too low. Now, the thing to understand about too high, too low is that the market's an auction, so it's going to try to figure out and remember, this is about time frame also. So this is too low right now. This is too high. This is resistance. So when I come back here, here's what I need to do. We are trading something called reversion. And what reversion is basically pricing. So if I find too high, of course, at a high volume node, I can sell it. I can sell this against the mid, which may be up to you. I have support here, and this is now my new retail price, high volume. So this is a variable high volume node. This is now one, and this is the retail price. I'm moving away from it. See you later. I'm not paying that. I mark it. Now, this is the new retail price. What happens if it's too low? Then I come back to what the last place it was too high. This is resistance. Here's what I can do here. If I sell this, which I can, this is my target. If I sell it, I have to get risk neutral. Now, there's another reason for this. Where's my stops? There. You see? Where else do I have stops? Above here. So what is all this? And I have an outside edge over here, right? So what is this? Outside, stops are going to be up in here. And if I get stops taken out, I can sell it to come back there and down there. But I don't know where the outside edge is. This is part of the issue with this trade, which is everybody, outside in. Where's the outside? And don't forget, I have an opening swing up here, and I have buy stops for all the shorts in this leg, and I have a high probability of filling the gap. You didn't forget that, right? So let's watch. Too high. Now, what I have here is where the sellers took control. So I can look over here, and I know my sellers are here, and I know my volume is here, and I know my sellers took control here. So I have options here. I can, if it's in my plan, I can sell this, and we've got to come here. If it's not in my plan, I have no trade. I have VPOC migration. Where are we? We're back here. What is this? Outside. Do I know? No, I'm asleep. I missed it. Break low. I'm back under here, and I checked this. I got the stops above here, but I didn't clear this. So that is, my sellers are here. If I know that, now my sellers are back and there's a swing down. That's a trigger. I can sell this and then break. This is now VPOC. It's either going to go up and I get blasted or break down. Right here, if it breaks down, this is too high. This is resistance. I get VPOC migration. I can sell this, and my stop needs to be out here where the sellers here took control. Okay, so this is a structured short, and I don't know here anything, right? My teeth are chattering with everybody else. Sellers are now in control. This price potentially is too high. I get VPOC migration, which is saying, maybe not so much, but where's my support? It's down here. So if I take a short here, here, or wherever, I have to go here. And then I'm looking to fall out the bottom. Let's see what it does. Doesn't do it. Now, so if you take a short here, if you don't get scaled, you would take a stop, okay? So this is a matter of here, here. I can't say whether or not you would get a scale. Let's assume you didn't, okay? And you would take a stop. Now, what is next? Now, I still have to be aware of the possibility to squeeze out, right? Where do we come? Back here, outside. So right here is also another short. It's coming off of here. Again, this is advanced. I'm trading what's called mean reversion. Mean reversion is outside in. So this is the high volume node at the time. So if I get short here, let's look at it. Where's my structure? Going to be similar to this. My buyers were there, break low, sellers take control here, entry can be there. All right. Here, break low, entry would be in here, stop could be here, and if your entry is here, if you don't get risk neutral, maybe, I'm going to assume you didn't, okay? Because you entered here, 44, and it got, 43, you take a stop. Is that a problem? Other than how you feel about it? Now what? I got buy stops here, I got an outside edge here, and I have a high volume area here. Trigger, short. This now, I got to clear this high volume, and I'm looking again to come down. Okay, it's the same trade as whatever, this one. It's just from a different location, that's all. Short, I posted this in TraderLab, I think. I can't remember anything at this point. And then we're going here. So that's the trade. So there's still more, don't forget. There's sell stops under here. So that's fuel, as I call it. And we have liquidity here. Now, this is important, what happens here. Look what happened over here. This is another short, by the way. Let me show it to you. Now, guys, I'm just showing you ideas, okay? And all of this you can learn in TraderLab. Now, why am I having trouble here? These are order flow triggers. Now, let's look at the alignment. I break low with a sweep. When I see this is my resistance and by the way, look at this iceberg. You see this? Now, this is just something I saw and I was going, oh, look at that. This is the stop and iceberg detector. This guy is looking to sell up here. What's he doing? Oh my goodness, I'm missing it. Chase, 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 chase. 1,000 sellers in here. You think there's a little motivation, perhaps? Now, don't forget, we still got the gap. So, sweep, order flow trigger, short continuation trade, and we have another naked volume point of control at 30. Next target, and this we have to be aware of here. This is an order flow trigger, and it now is going to become resistance, subject to your plan. Let's keep going. Maybe. You get the idea. There's a box there. I don't want to. So here, this is a continuation short. This is a target. You can use these as targets. The reason you would is because those are buyers, passive. And you can see this is how order flow is so useful. I know here there's sellers. I can sell it. I know here there's buyers. I can scale. If I get below that, I can continue along my merry way because I have targets down here. If I come back above it, then this trade would be over. But where was the short from? Wasn't it? Where was it? Wasn't it up here someplace? I don't remember. Wasn't this the short, guys? So roughly 49, 45, and let's just assume you take this thing out at 37, 38. Is that all right? So let's watch. What do we know? The market is short. Let's look at the structures and the behavior. Let's look at this a little differently now. Some of this, by the way, guys, is advanced, I guess, and I just want you to see some method. This is not something you're going to learn in a half hour or 6 months. This is a commitment to creating excellence and understanding market mechanics. You don't need all of this. You need to understand the basic process. The process is called mean reversion. The yellow line is the mean. The nature of the market is to find, remember how it works in all time frames. What's too low? We don't know until it is. Hindsight. So there's no prediction in trading. What I have found, and I started out wanting to predict everything, it's going to do this, it's going to do that. Oh, it can't go any lower, right? I'm going to buy it. It just can't go any lower. Meanwhile, back at the margin call, yeah, it can, right? What's too low? You'll never know what's too low until hindsight. So there is no too low until it is, right? You do not know what is too low until the participants vote on too low. They will vote on it with their dollars. And it can get too low and rotate over itself. And here's why the market can go up over itself. Because in this leg are buy stops, right? We have built-in buyers in every rotation. So in here, we might get longs or only buy stops being triggered to give us an opportunity to come back to a location for continuation short. And I'm not suggesting anybody trade this time frame, but look how you might do this. If I know my sellers are there and I know this was too high, my retail price at the time, and this right here was too low, but I got below it. So now it's too high. That's why I can sell this. And if I come across this, I can go to the next one up. If I get a sell trigger here, which that is, if it's my trade, I can take it down to there. Why? Because this is where my sellers were. And the old concept we all have learned is resistance can become support. If I break above resistance, which now becomes support, I can then go back to the other resistance, get a trigger, and come back to support, right? And either, continue or not. Is that making some sense? Just say. Now, remember, we still have the possibility, and this is 3 minutes in, by the way, so let me move along. We still have the possibility of a squeeze. Let's look. Where does it come back? Take a look. See if you don't see something interesting here. This is a process and a method that you can learn. Now, I'm not suggesting these are any trades you ought to do anything with. I'm suggesting you learn order flow and market mechanics. If I sell this, I got this. If I don't get there, I come back up. If I come back up, I got what? I got this. If I come here and I get a trigger, right here, I can sell this here, right, to go to there. If I get squeezed, I know the following. I got buy stops there. I got VHVN up here. I have structure sitting here. If I come up here, I get a trigger, I can come to there, right? If I get a trigger, I can come there. If I get a trigger, I can come here. These aren't trades you should take. These are structures. This is reading and navigating the market. What do I know about this? My buyers are there, you see? So, going to zero, break high, my buyers, you see them? So if I take a short, these aren't trades I take. I'm showing you how to read. What do I know? I can go there. And, either that or reverse. If I reverse, now I know is my buyers are here. My buyers are here. There they are. And my sellers are here. And my buyers are there. Once I get this, it's hasta la vista. Subject to your plan. you would be out of your short here if you took this. Now, these again are not necessarily trades I take because I'm more of a larger rotation kind of guy. Now, let's remember something. The gap, 67% probability. What's happening? The shorts who came in now are getting squeezed. So what do we want to do now? Well, for me, I don't have a long. I'm not me. I'm just nothing to do. Where did we come back? Let's look at the structure. See it? So that doesn't mean I take a long. For me, this is suggesting to me I have the gap and now I have the shorts all in here. And once these sellers can't get below my structure there, then who's on the hook? The shorts. And then what do I have? Yesterday's low filled a gap. And what else do I have? Watch. VPOC migration. Uh-oh. I got to label this. Follow. Just follow. Now, what I'm doing, the only way, not the only, but let's say a way I suggest for developing traders is to, number one, anticipate behavior, not predict it. Number two, stay aligned with the dominant side, which is the sellers. Then wait and anticipate context. Remember I talked at the top of the stream about time frames. Is this a long or is this just a counter rotation? Do you trade counter rotations? I'm going to say for developing traders, no. And what was this? Top of the stream, 80, right? This is where we fell out of that distribution. Let me bring you back. Maybe. Where'd it go? $80. So what we're doing, and this is full session now, but this is the 80. Remember at the top of the stream, this was our distribution, and then we rejected it. We fell out. This is the outside edge. So if I come up into the gap, I got 80. 80. See? And what's resting there? So now I'm anticipating the location, and I'm looking, and it's also the full session VWAP. Maybe. I'm not sure, but that's besides the point. So what am I going to do? I'm going to sell it, mean reversion to come there, to come down and come out the bottom. That's my trade plan. Not saying it's any good. I'm just saying that's the plan. $80 with a sweep into the liquidity, order flow, trigger. You got everything but the kitchen sink right here. There's your short. There's your structured entry. There's your sellers. Another way to do this is if you shorted this here, your stop's got to be above there. Just saying. So there's no perfectionist. You sit here and your teeth chatter, but this is about as good as it gets. Screenshot this. Location from the ETH. So what do I say about trading? Anticipate. To participate. Sweep. Trigger. Sellers take control. Test. Sellers. So this is a short. Wherever you want to get in, you put your helmet on, and then you're going to go here. Back to the overnight low and the VHVN. Because if I get below this one, which means I'm not paying that, back to the shopping, then I'm going to go back to the last place that was too low. Then South by Southwest. And this is the top of the stream, and this is all posted in TraderLab. 60. This area is the target. so far. And here's the other piece. I've got this naked volume point of control, which is important, 30-ish. If I get below this one, don't forget I'm now below that one, but if I get below here, it sets up sell stops here. These are lows, sell stops, target. Okay, and this is all at the top of the stream, and it's all posted in TraderLab before they open. Here, let's look at this. Let's watch. Sweep, counter rotation, resting liquidity. Break low. What happens to this? Just giving you some ideas. Again, just ideas. Nothing more than an idea. Here, break high. You lose your breakfast. Pull back. It's support. Going to the moon, Alice. Trade management. Oh, break low. FOMO. No, not if you're in TraderLab. You understand your trades are going to come. This is your short against here. You got out here. FOMO? No. Yes, but manage it. Back to here. Absorption. Location, location. Remember real estate. What else? This. What else? That. Outside edge. This is called mean reversion. Underline the term mean. What I suggest to all developing traders, the number one behavior that I believe if you completely learn and understand in a vertical integration of time frames, so there's multiple time frames, you will have something that most other traders have no clue. Because this is how the market works. Most traders are letting indicators define the market. The market is not made up of indicators. The market's made up of participants. So let's go back. If this is too high, notice where it is. I can sell it. Now in the developing time frame, I get VPOC migration. Multiple time frame concepts. Previous price that was too low, support, can become resistance. Lovely. Next thing, developing time frame. Current pricing may be too high. Now, I also know if I come outside, I can take shorts for mean reversion. This is now the mean. In a different time frame, this was the mean. If I get below this mean, I can trade inside of it towards that mean. I know. Multiple time frames. Let's go. Let me take you back. I just got to bring you back. This will help, maybe. Hope so. What is the mean? In a higher time frame, this was yesterday's high ETH. That's the mean. Too high. Higher time frame. Then I get below 45, which is the mean for the whole enchilada going all the way down. It's all the volume. The highest volume is here. It is the mean. So I'm taking these days, 1, 2, 3, 4, 5, 6, because they're trading inside each other. You see, this includes yesterday. And I came back in. That's balance. Notice where I came back. Too low, back to the mean. So this is my world in this shorter auction. Everybody does this differently. I slice and dice the market to get the behavior that is relevant to me. Everybody says, what's the right way? I'm going to say it's the way that gives you what you need. You can't replicate anybody. Even what I do, if you don't relate to it, there's no plug and play. The idea of the TraderLab is for me to transfer my knowledge of how the market works, market mechanics, locations, and deal with the emotional side of this thing. Build trade plans. And then basically, you're just waiting for the bus. This is not a video game. This is not like shoot somebody and you get a point. It don't work that way. This is a business. So if I know this is too high, I'm out of there. If this is too high, who knew? I'm out of there. And then if I come out under here, my locations, this was too low previously. If I get below it, and this is 52, then my next one is 29. If I get below 29, it sets up this 802 and then maybe 90. I'm just going down the financial food chain. What's it going to do? I don't know. I don't know. Do I care? No, I don't care. Why don't I care? I have nothing to do with it. I just align with it. When I say I don't care, I do. But I can't be attached to being right or predicting anything. This is the issue we have with psychology. I knew it was going to do this. Or now you're not participating and you're FOMO'd out of your mind. I got to find a trade. I could have got all of this. Why didn't I take that trade? Now the lunatic is in control. You're not. This is a business of self-control. So that's a short. This is a short continuation trade, VPOC migration. And the reason I'm mentioning this level to you is this was too low previously. It's now resistance. Let's extend this. Where does our trade come? Look at the method. Look at the method. Resistance. What comes back in the book? Order flow, liquidity. Where was it? Here. Do I know? No. Let me tell you what else I do know. There's buy stops sitting here. So if I take a trade here, which is a trade for me, I take this trade all day, my stop's got to be out here, not here, because I can easily come up here, and that's why you got to look left when you're trading reversion. This is called mean reversion. Is everybody following me, by the way? How you guys doing? Now, I'm going to try to get caught up here, but I want to show you the trade, so I can't really look at the questions. I'm going to do that in a second. This is resistance. What do I know? I know I can sell this, and I got to be out here. I also have another trade, a structured trade called VWAP to VPOC. I already know that. I also know I have an outside edge up here. That if I come outside, I could sell it, and that's called mean reversion. Now, I don't know if it's going to do that. My current trades, and I post these in Trader Lab. Can't say I post everything because I can't remember, but there's a lot going on in Trader Lab and a lot of other traders. It's not about me. The Trader Lab is about you. I'm just a trader. I've got more experience probably than all of you, but also I've paid more dues. I started in 1980, so I've had the benefit of donating a lot of dollars over the years because we didn't have paper trading was literally on a piece of paper. I started before there were any PCs, no internet, nada. You bought a book or you went to a seminar. I bought all the books. I went to some seminars. I got nothing out of the seminars that was usable. And I have to tell you, after reading all the books, I didn't learn to trade out of a book. Sellers are here. Location is there. This is a short. This is a scale. And you're looking to go there. This is targeting. There. See it? There. And this is the specific location. And you got this too. Who knows? See it? So, are you done? You see? Why? Let's come back to the higher time frame. I don't know where I am. Oh, what's this? I don't even know what time is it here. Oh, 10:30. I haven't seen any of this. Let's look. Well, that's the primary target. I could still trade this kind of stuff like there to there, going for that. If it doesn't work, then I can come out further for reversion trading. I'm still short biased here, but I also have hit my primary target. So what I would be doing, like this is fine. This is fine. Back to yesterday's low. Look where we came. What else is up here? Let's come back to the auction. What is this? Variable high volume node. It's a target. let's look at this. This is structured trading. Now, this might not be your trades. You might, want to, I'm not saying you should trade this. My goal here is to show you market mechanics. You then have to develop a plan that tells you which trades are qualified in this condition. If I took a short here, I'm going there. Why? Because this was resistance, and then it becomes support. So if I take this, these are just quick, but look at them, they're 10-point rotations, or I'm done. And let's come back to why I could be back in my Barca lounger. Let's try this. All right. Nothing is easy. And I'm going to look at your chats. Thanks for your patience. Let's come back to what we said what the plan was. Wasn't that the target? See it? So how can you do this? Did I predict it? No. But I know something most traders don't know, and that is, that was too high, that was too high. If this is too high, and I open down here, then there's trouble. If there's trouble, I can come down to the outside edge over here. Oh, it's on sale in a higher time frame. And then if I rotate back, I can come up here or squeeze back inside. I could do whatever. But my primary trade was right there. So is that predicting? No. What I'm doing is I'm using the behavior of the participants to tell me the last place it was on sale. And potentially, and I don't know where this is, if it'll market, there's no precision. So I got to remind you of that. I do know if I got through here, I got this, and it potentially is on the hit parade. I also know, how does the market work? The market goes up to go down. It goes down to go up. It goes up to go down. It goes down to go up. It goes up to go down. It goes down, go up. Why? There's longs in here. If they're on the wrong side, they become sellers. Thanks. There's new sellers that come in here. Oh, it's going to zero. Sure it is. Maybe, but maybe not at the moment. Now the shorts that are in here become the buyers because they get squeezed. And now we're going to have new longs coming in here. But most of the buying might be short covering and maybe some new counter trend traders. Who knows? Does it matter? Doesn't matter to me. What matters to me is this. And now I can be done. Or I now change into a different process and I just trade rotationally inside of this thing. Or I'm done for the day. It could be either one. Let me ask you, if you had taken these trades, some of them, a couple of them, what kind of day might you be having? What do I know about this? This is too high. That's what gives me that to support. So subject to, I could just trade the chunks, there, going for this and this. You see where this is? This right there. You see it? So, and this is more, I'm not saying anybody should do this, but these are 10-point rotations. If you understand what's going on and it's in your plan and it's vetted, you could be taking these or you're done. Does this make sense? Now let me look at the chats. Sorry guys. I just wanted to get current and help you see what's happening. I can't tell you about Bookmap on whatever day silver dropped. I can't go look at it. Greetings from Peru. Well, greetings to you. The huge drop in silver, any market, and you trade silver, you got to understand the market. It is a thinner market. Gold, silver have their own idiosyncrasies. I used to trade across all the asset classes. I traded gold, I traded silver. I traded everything. I even traded platinum, which you really got to be out of your mind. So very thin. So you need to understand the market. And when you get stops going off in thinner markets, it's like an avalanche. There's no there's nothing there. You need a passive participant. If you got a sell stop becomes a market order, you need a passive buyer. And if there's nobody sitting in the order book, they'll get around to you eventually. That's what creates skidding. Where you have a stop, let's just pick a number of 10, and you get filled at 2. It's like, what happened? Well, because there was no buyer there. So you got to understand the market you're in. So I always suggest for developing traders the ES because has the most depth. And what does depth do for you? It's almost like pebbles on asphalt. If you have very little liquidity, you have smooth pavement. You can get out, big moves. When you have depth in the order book, it's going to slow the market down. And also, notice the behavior right here. And by the way, I'm not saying anybody should do anything. What I'm saying is you ought to anticipate behavior. When there's no liquidity, you got asphalt. When you have depth, you've got passive sellers in here. And there's sellers here. There's the iceberg. There's the resting liquidity. There's absorption. This is Pac-Man. If this is too high and it's a variable high volume node, I can come here. And I'm not saying it's anything. And what do? We're testing yesterday's range. We can't get back into yesterday's range, then counter rotation. That's all I can tell you. Do I know what's going to happen? No. Do I need to know? Can't know. Are you guys following me? How are we doing in YouTube? Billy Blast, this methodology is not automated. It is behavioral. Now, I have worked on this process in with a hedge fund, okay? And I will tell you, there's only so far you can take this in a algorithmic process. You can take some of it, but you really need to understand how to shop. Do I want to automate this? I have not, because I don't think currently AI does not work better than my brain. Maybe it does, but I haven't seen it yet. So my mind understands a lot of elements here. I understand what this is, I understand what that is, and I understand shopping. If I understand shopping, I understand what creates pricing and why a market might behave at a level or location. I understand right here, I can come there. That's what I know. I don't know anything else. I can't. So I can't, how do I back test this? You're asking me. Well, I've got to take samples. And the first piece in all this is what's called the condition of the market, or context. And the way, early on, I built trading systems because I was a fund manager. And I was position trading, or I wasn't doing day trading. Day trading for me was a 3-day swing. Okay, so I'm just telling you, that to me was almost like scalping. So at the time, this is back in the early mid-1980s. So the point I'm trying to make is the process has always been the same. As you go down in time frame, you're going to see a generic process of shopping. If this is too high, I can come back here. Now, the other thing we have to know is the market is short. And what else do we have to know? We already hit our primary target at the current low of the day. And it doesn't mean we won't come back to it. It also means maybe we're done on the downside. I don't know. So this was the target. I think that's pretty good. What do you think? Low of the day target. Who knew? I don't. So if I go down in time frame, I can still operate this, but I need to create conditional statements. If this, then that. In other words, this was down, and then where? Potentially to that. If that is too low, then what? Then I can come back across the range. I know that. Now, if I go into short time frames, I can anticipate behavior here and then possibly come back there and maybe down here. You see? But I already hit my, you see, my target. This is where the question comes, trade plan. Are the shorts done? Do I get back on my Barca lounger? I've already taken out the first hour's low, so I've had range extension. And to take out the first hour's high, and remember where the stops are, they're sitting here for the shorts. I can have what's called a neutral day. A neutral day is about a 29-30% probability. But what do I know? See, this is what comes back to what do we know? I know buy stops are here. I know this was an important level, which we sold last time we were here. That was a short, remember? That was a nice short. What do you guys think? And the goal was to come there. You could put this trade on here and don't take it off to there. Or you're going to manage the trade and get taken out on rotations, put it back on, whatever your plan is, you see. That was it, okay? So if I know this is it, anytime I'm taking shorts in here, I might be on the wrong side. I could work it, but I have to be aware. I cannot discount that or that, okay? So taking shorts now has more risk to it because of that. Now, let's say I do get above here. Where's my next target? Overnight mid and value area low. Maybe even settlement. I have no clue. Not my job. So I know I can come out here, and if I do, subject to what happens here, I'll be looking to sell it again. Because who might be the buyers here? Let's think this through. Who might be the buyers? Is it possible it's buy stops and not buyers? If it's buy stops in a neutral day, subject to where I come out here, I could trade the short side again to mean revert, to come back in. That's what I would do. It's not a trade recommendation because the market can, can do whatever it's going to do. I mean, if we can come up here, so we got this. And you're going, well, pick one. I'm going to say, I don't know which one. I know what it might do. So I already know I got sellers sitting here. It's these guys that sold up here. Notice they're back in the book. If I pop the stops and I come back under here, it's a short for me to come all the way back down there. Is that making some sense? Now, guys, they're not trade recommendations. I mean, I don't know. Do you? I don't. The question Truman is asking, are the separate investor RT value profiles, I have balance area zones for the days after them. I break them up, Truman, to the material information, what I want to see. Notice what's going on here. What is this? Variable high volume node. Now, these are more, I don't know, what do I want to call them? Look at the range. If I'm taking this location, I'm still trying to come here. Any one of these can come back here. I couldn't tell you. I can't tell you because I have no clue. So my job is not to tell you what it will do. I can tell you where it might do it. That's because I understand how the market works. I take stops because I understand there's overhead and cost of production, not about being right. Right? If you're hung up on P&L, you're in trouble. If I take a short here, I want to get risk neutral. If I get taken out, I'll put the trade back on again. I have no problem with it other than my emotions. And I've learned that my emotions are a waste of energy because they have nothing to do with the business. So, by the way, I've always talked to traders about the problems of the lunatic, Hyde, Jekyll and Hyde. Hyde is call it that fundamental primal wiring that has sustained us as a species over millennia. And that is to avoid risk. Be certain. Be right. Or self-esteem. get approval. I'm so smart. Well, how about this? Doesn't take brains to trade. What it takes is an understanding of market mechanics, shopping, which is market mechanics. So if you could shop, you already have the basis of that part. And then it's time frames and behavior in time frames. Remember I said top of the stream. My short might be somebody else's long. You see? I can't tell you. So if I take a short here, I'm just going there. Can you see the structure? That's all I need to do. I can just be taking pot shots here, basically. It's not really a pot shot. Or I can be done. It doesn't matter. But here's the thing. When I'm talking about psychology, I cannot dismiss my wiring. I have to be preemptive. We have a psychologist in the Trader Lab, JJ Marks. Thanks, JJ. And he has the what do you want to say? The proverbial virtual couch. I'm only kidding. Basically, what it is you have to be your own shrink. You have to understand the chemicals that are released in your brain. So you got to do some study. You have to understand cortisol. You got to understand fight and flight methodology, what the process is in your wiring that triggers the chemicals that are released in your brain. And when the chemicals are released in your brain, you become myopic and you forget everything else because you are now being dominated by a primal behavior. Okay? Now, when you're not conscious of it, you're going to react to it. You're not even going to think about it because that's how it works. You step in front of a bus. Don't. What happens? You're not going to process on the conscious level, gee, there's a bus. I better jump out of the way. You jump out of the way without processing it because it's primal. Does that make sense? So what happens here is when you're right here and there's uncertainty, Hyde is keeping you from stepping in front of the bus because Hyde perceives a risk that cannot be quantified in the moment. Is this going up or down here? And there's the uncertainty. Or I'm short. Oh, I see an up rotation. I bail out. I'm afraid of giving it back. Who is that? Hyde. Now, where's the answer? Should you be out here? Should you still be short? Should you be holding to there? Should you be flat over here? Give me the answer right now. Right now, step up. Give me the answer. What's the answer? Right now. Should you be out now? Should you be trailing? Are you holding for the target? 18? Or what? What are you doing? Give me the answer. Thanks, Willers. Holding. Okay. Let's go, YouTube. What are you doing right now, right here, if you were short? What are you doing? What are you doing right now? Are you out? Would you bail out here? Oh my God, I'm giving it back. That's Hyde. Or are you holding for mid, VWAP, VPOC? Which is it? What are we doing? 1.6.8. Oh, Fibonacci. Ah. How nice. Here's the answer. Your plan. Not, you can't predict anything. Or if you can, DM me. I want to talk. I've never been able to do it. Your plan. You sit here, bite your nails, chew on the edge of the desk. Fine. Your plan. What are market mechanics? What do we know? We tested yesterday's range. What else do we know? We could squeeze. Why not? That's what I know. What do I know? This is support. What else do I know? If I get under here, I got mid. What might happen at the mid? Mechanical buyers, retail trader behavior. VWAP, mechanical traders. I can get a counter rotation. I have to get below here to go there. If I don't, and I come up here, then the trade could be over. What am I trading towards? This. Here's the question for this astute group of traders. What are you doing? Where are you going? How do you manage this? The answers are in your trade plan. That's my point. What are you doing? What will you do? Not how do you feel? How do I feel? Every down rotation, euphoria. Every up rotation, panic and fear. Now, I'm kind of exaggerating, but do you know what I'm talking about? Why would I feel that? Because I'm wired for it. So in my trade plan, every day I have a recentering mentally that I'm no longer on planet Earth, and the things that protect me from buses and whatever else is out there are going to be activated. I anticipate it. It's part of my primal wiring. It will take me out of the business if I let it. And I've learned by using the error cost calculator that Greeny created and shared in Trader Lab, keeping track of my errors. I have learned, and I did this many years ago. I tell the story. I created an error cost calculator. And I don't remember exactly, late 90s or something. But because, we all make errors. And what do? If we're even good about it, we put a note in our journal. I did this, turn the page, gone. We all think about P&L. Well, I started thinking about errors. And I said, I don't control the outcome of any trade. I certainly have control over what I do, maybe. I got to get control over me. The market I have no control over, right? So what am I putting all my energy into this being right stuff? How about not being wrong relative to my plan? And maybe my plan stinks. I'll make that better, but I got to follow my plan. I can change my plan. But what about my errors? Can I change that? I have control. What are these errors costing me? How about this? $10,000, $20,000 a month. Real money. I said, wait a minute. You mean I'm giving that money away? Hold on. Put the brakes on. Right? I wrote a check out, put it on my monitor. Every day I'd sit down the trade. That thing, and it was a big check. These are when we actually had paper checks, and it was a large check. Put it there. I had to look at it. What did that do for me? It showed me, not number one, I had the control. Number two, I was a substantially profitable trader already, but I was sabotaging myself and throwing money away. I might as well have written it out to charity and at least got a tax deduction. Does that make sense? Anyway, guys, this is the Trader Lab. I hope you got something from this. Apologies. By the way, this is the last short. Who knows? Never a trade recommendation. Where do we anticipate behavior? Over here. So what do? Follow your plan. The outcome of every trade is random. We're not here to be right. What's right? Following your plan. That is it. What is the outcome? Random. How do you grade yourself? Plan. And over time, if you have an edge, in spite of overhead and cost of production, not right, wrong, following plan is right. Stops are part of trading. It's cost of production. Remember, the casinos pay the gamblers. Not a big problem, other than how you feel. By the way, feel, not part of this. You're going to have the feelings. What you have to know is they're going to come, and you have to already know how you're going to respond. You have to build in preemption and recognition. I'll keep that for another time, or come to Trader Lab. There's a link in the bottom of YouTube if you're interested in this methodology. Trader Lab is for serious traders. It's not romper room. This is the business of trading. And if you're interested, there's no cost. Use the link in the bottom of YouTube. Also, if you visited today, please support the stream. Give a like. The only way this is going to continue, since there's no cost for it, is that you like it and you come to Trader Lab and just, as we might say, put a spear in the ground, drop anchor and say, I'm going to do it. Here's an old motto that I did for myself many years ago that someone shared with me in the 1970s. It's this: nothing to it but to do it. Have a great day, everybody. Thanks for visiting Trader Lab. And don't forget to give a like on the way out. Appreciate your time and your interest.